It's definitely clear that across all the stages you look at in the specific sectors that there's a ton of innovation occurring, there's a ton of interesting opportunities, but there's also a lot of noise. And so to be able to differentiate, where you're going to spend your time and focus on those signals, how do you determine quality and value when things change so rapidly?
Yeah, I think this is a really important question as we are going to really start to see enterprise buyers move from pilots to full-on production. And so how we think of quality is thinking through what that customer pull looks like and means. As a seed and Series A investor, really understanding how customers are viewing the product and how durable they are viewing that product within their own enterprise is really critical. And how do we measure durability and how do we evaluate that? We look for things in terms of how the enterprise is able to buy the product. Do they want to sign these multi-year, multi-million-dollar contracts? And do we see that contract expanding over time? Are the companies able to upsell to these enterprises without many meaningful incentives? These are some of the things that we're looking for to really determine that early stage consumer or customer pull from a product. At the same time, in AI, we think the companies that are going to win are ones that have a very specific wedge in a workflow. So we need to believe that the wedge that the early stage company is building not only is vital to that company or that customer they're building for, but has the potential to naturally expand beyond that initial pain point. So these are a couple of the things that we're looking for to really understand quality and if these companies can scale at the earliest stages.
Maybe if I can, there's two things you mentioned that I think are relevant for our climate space as well. One being on incentives. So when we think about our investment opportunities, we are actually avoiding things like green premium and incentives that are happening, whether it be subsidies or regulatory tailwinds, because we think that can conflate what the underlying demand is. And as the market changes, those incentives can move and go away. And so what we want to see is this underpinning of what we call a painkiller for the company rather than a vitamin. And that painkiller is this driving material cost reductions or material revenue generation for a business? And can we see real customer payback? And that customer payback we like to hear about is on a pretty short time horizon of anywhere from 1 to 2 years, because we believe that means there's a real demonstrated ROI for these businesses. And then I think to your second point on sort of that quality of the revenue and the proof points you have, one stage later, we also like to see multi-year contracts. And I think that's increasingly important at the growth stage where you want to see customer expansion. We want to see evidence of expanding NRR and incremental product that they are able to upsell and cross-sell to their customers. So when we think about kind of both incentives and also the quality of that revenue, we're really thinking about these customers who are sticky and want to spend and stay with the company for a meaningful duration.
Ross, we'll come to you in a second, but this track of a company life cycle and what you're looking for in terms of quality, I'd like to complete with Oz. So Oz, you're looking at companies that are established, they do have these big contracts, you have lots of data you can look at. In this environment, how are you underwriting to quality?
Yeah, for sure. I think a few things don't change, like you pointed out. I get the benefit of seeing the growth and seeing the customer renewals and the expansion and retention. I think what's more difficult is understanding durability over the multi-year timeline. I think we all can admit that we're in a market today with all the technology, all of the competition. It's hard to really say for certain what 2 years from now will look like, even a few months from now. And so I've been leaning a lot more into product velocity. This is both measured by how quickly you're improving your existing product, but even more importantly, how quickly you're entering new product categories. I think it's a good measure of management team's ability to kind of take the latest and greatest technology and find solutions to problems for customers. And so in a world where we're unsure about what the future looks like, if you're following a management team that's navigating that uncertainty well, I think it bodes well for revenue and profits over the long term.
It's funny you mentioned that because that's something that we've been really focused on too, that speed of execution in this market where technology and things are moving so quickly. That speed of execution has become even more important for us as well.
Sure.
That's a great point.
It feels like, early and late stage look a lot more similar nowadays given just the rapid pace of change.
Oh, absolutely.
Speaking of horizon and duration, Ross and Biotech, you're certainly looking years away from anything generating in commercial demand or revenue. How does that change how you view quality relative to what we've just discussed?
Yeah, well, that's such an important question. Just to highlight some of the words that others have repeated in this conversation: revenue, customer, product. They don't necessarily make sense in the biotech ecosystem. How do you evaluate the quality of a pre-revenue company that doesn't have any customers and only has a single product that's 10 years away from commercialization? We generally think of quality in terms of drugs that generate value for patients, drugs that have linear biology, a disease process, and a target that is de-risked, and drugs where the next tranche of capital unlocks meaningful value and enables a transaction or access to capital markets.
Well, thank you all for those points. It wouldn't be an outlook if I didn't ask you kind of what do you think the market is underestimating in 2026?